Great. I see some people are muted. Just make sure to mute yourself if you're not asking a question later on. We will have time for Q&A later in the session. We're going to start with a quick intro about DoDash, and I'm going to give it to Nikhil and Amy to go through the session. So, very briefly, welcome to this another edition of Nikhil's Investor Lounge. Today, we have Amy here. Nikhil will talk about our guest in detail, so I'll leave it to him to introduce her in a minute. Before that, just for you who don't know who DoDash is, what we're talking about, there is up to this day still a big issue for many startup founders, which is access to capital. Nowadays, it's about finding the right investors, managing them, going through that whole flow. And we as DoDash built an investor relations toolbox to enable startups, investors, and startup support organizations to successfully partner up for high efficiency and gain. And if you're interested to learn more, I'm happy to walk you through this. You can go to our website on dodash.com. We have regular demo sessions. I will link the link to our demo sessions into the comments after I'm finished here. But you can also ask me if you want to learn anything more, from finding the right investors, managing that, doing your due diligence, over having an inbuilt CRM, up to doing your updates. With DoDash, we enable you to cover the whole range of investor-startup relations in one platform. And we have further support when it comes to credits, education material, and so on. We are supported by many, many partners, as you can see here, from accelerators, from startup support programs, from universities, who are all believing in the same vision, which is making startups investable. That was just a very brief intro. And now I want to give it to Nikhil to introduce our guest and take it from here.
Hey, Amy, can you hear me? Just give me a...
Yes,
Let me know. Great.
Yes. Yeah.
Thank you for making the time. I'll quickly take a moment to introduce you. So Amy is a managing partner of Quake Capital. Quake Capital is one of the top 10 seed investors, according to Forbes. The best part, Quake Capital is the second most active investors in female founders. So any females out here, make sure you are visible to Amy. Don't forget to ask her some questions. And of course, Quake Capital is also one of the top 10 lead investors in the US. Amy, no wonder Quake Capital has a very strong female founder focus. So tell us a little bit about that, just to set the context, and because this is something which resonates very closely to DoDash's vision. So just walk us through that.
Yeah, thanks. And thanks for having me. This is great. I think, when I started with Quake, I was an advisor in 2017. 2018, I came on as managing partner. I think industry-wide, I think it's really important for, in order to have sort of more investment in female founders, a lot of the partners need to be female. I think that just brings a different lens and perspective when looking at deals. I think, that industry-wide, about 11% of the seed deals are, early stage seed deals go to female founders. That's a pretty low percentage. I think overall about just under now 3% go to female founders. That's across, all stages. So in order to bring those stats up, I think you really need to have female partners really managing sort of the purse strings and managing the capital that gets invested. So I think as we see those changes and more female partners come sort of up the ranks, I think you're going to see more female founders have capital go their way.
Thanks for that. So it has been said that female founded companies perform better as compared to male-led companies. How true is that?
Well, I think if you look at just how hard it is for female founders to get the friends and family round, to get the pre-seed round done, they have to work 10 times harder than their male counterparts in getting the capital and getting the recognition. So I think that, it's just, while Quake doesn't have a female founder investment focus or a minority investment focus, we tend to invest in the companies that have traction, that have merit. And those are the founders that rise to that level of excellence. So I think that is our thesis. So our thesis is really investing in founders that have traction, that have done a great job in launching their companies, and that rise to the level of getting capital at the seed stage.
Got it. Guys, keep the questions coming in because that's what ultimately it's about you. So keep the questions coming in. Amy, that was a bit of a serious stuff. We had a investment thesis related start, but I mean, I would like to know what tickles your senses, what makes you laugh, what's one fun fact about you. So there are 3 questions all rolled into one.
A fun fact about me. I've moved around a little bit. So I've lived in a number of cities. I am a snowboarder. I was an equestrian as a junior. A fun fact. Yeah, I guess those are sort of fun facts. I would say the funniest deal that we've ever looked at was very funny. It was a company out of Australia. We look at a ton of deals. We look at about 1,000 deals every few months, and they rose to the first round interview because they had a lot of traction. It was a bra company, and it was 2 gentlemen that got on the call. It is a female founder, but the 2 gentlemen got on the call and started pitching the business. And one of the main questions that we all had was like, founder market fit. How do you guys have the expertise to launch a bra company? So the answers were kind of funny. And then the founder came on, and she actually quoted her dad as a reason for starting a bra business. So it was very, very interesting, very funny pitch for sure. So yeah, I would say that was the funniest pitch that we've ever had at Quake Capital. Yeah.
That's very, very interesting. I mean, the audience, I would quickly like to touch upon, Amy has an amazing track record in helping companies achieve goals through, strategy and laser sharp execution. She listens very, very keenly and advises to make extremely good choices. So, keep the questions coming in.
Thank you.
All right. Let's move on to the next. It's a question which I usually ask pretty much every VC on the show. In your opinion, what makes an entrepreneur's mindset very different from the rest of the people? I mean, you have such a vast experience. What is it that you see differently?
Yeah, I mean, I think to be a founder, you really have to not imagine the world without your product in it. If that makes sense, you have to it's a marathon. So you really have to, just have to have the resilience and the grit. You have to be a little crazy to be a founder. I mean, it takes over your life. You have to be all in. And that comes through in the interview process.
Right.
So yeah, I mean, I think the mindset has to be very intentional. You definitely want to win, and you will not hold anything back to do so.
Yeah, I mean, founders are delusional to a certain extent, right?
Yep. Yeah. Hopefully the delusional is coupled with, some domain expertise and, some strategy in there. But yeah, absolutely.
Okay. So domain delusionally delusionally domain expert or whatever. We have to come up with some interesting. Oh, you're the marketing person. You could come up with some interesting terminology here. Which will become a 3-letter acronym sometime. So what's that number one thing that you look for in a startup? Because I'm sure a lot of people are already saying, I need seed funding, but what exactly do you look for? That one little thing which gets your attention?
Well, yeah, I mean, I think for Quake, it's probably different than other funds. We look at traction. So if you were to look at a sort of a pie, 50% of what we look at is traction. So a product and market, it doesn't necessarily have to be revenue, but it has to be partnerships that are lined up to help scale and launch, or users, active users, that kind of thing. So traction and market, and then we look at 30% team, and then 20% overall, market opportunity. And if traction isn't necessarily there and the founding team is incredible and the market opportunity is incredible, then we adjust. But I would say traction is the biggest thing. Our overall belief is that if you have traction and you're in market and folks are buying your product and your churn rate isn't high, or you don't have a churn rate, those are indicators that you've got a successful start to a business. And those data points also are things that we can work with. So at Quake, we're very focused on data. We plug into KPIs and metrics and outline goals in the very beginning of working together. And we really kind of deconstruct what is your next raise, and then benchmark against what those benchmarks are, and then we goal toward that. So I think having those data points to work with is important, and having that traction in product and market. So I would say that's the number one thing that we look at when we look at startups.
Got it. So is that the reason you invested in DoDash?
Many reasons that we invested in DoDash. Yeah, I mean, I think our partnership in the 5G program proved out the platform, and also just your background. I mean, you've been a founder, you've been on all sides. You're an investor, you understand there's founder market fit. And as we, I don't know if we're going to talk more about, but there's definitely on your way to product market fit. So.
Thank you so much. Thank you. So just a couple of what is it that you would really like to see if there's a pitch which somebody wanted to make right now to you? What should be the core components of that pitch in, let's say, 60 seconds? What do you expect to hear so that you're willing to give the next meeting?
Yeah, that's a great question. I think a lot of founders go right to their product, especially if that's their sort of background, because they're proud of their product. But I think what's important is to start with, I kind of like a pitch that starts big. What is the overall problem set that you're solving? What is the solution? What is the market opportunity? So how big is the market opportunity? And then going into what the go-to-market strategy is, what the traction is, what the partnerships are. We like to look at sort of channel partnerships. What's the one-to-many that can help scale and grow your business quickly? And then getting into what the ask is. A lot of founders forget their ask. They don't outline what their round is, how much is left. So I would say those are the kind of the outline wise, those are the key things that I would like to see when I hear a pitch. I also like to hear the founder story. So if there's a series why behind the business, I think that's important to outline as well. Because when we were talking about the, what goes into being a founder and that kind of thing, I think having a really strong why behind your business will help drive you in the hard times.
Got it. So in that case, what are the ideas which you have encountered recently which deserve more attention from your standpoint?
Um, I think that Web3 is super, well, just from my standpoint, Web3 is super interesting. I think it's the new architecture of the internet, or the Web3, the next iteration. That is super interesting to me. Anything with ESG or environmental, focus to it is very interesting. That also has a business model behind it that makes money. I would say that those are the two big things. Web3 is of huge interest to me. Anything fintech too. I think fintech is just completely being revolutionized, and there's so much innovation around it. So I would say those are the three sort of key areas that I'm super interested in.
What are some very interesting Web 3.0 ideas that you've recently seen, and how do you see them evolving in the next 6 months, a year, or 2 years time frame? Any thoughts on that?
Yeah, I think when, as you look at Web3 and you look at the just the security around it, it really becomes a great vehicle for crypto, and that's basically how it started. And so I think for the creator economy, I think it's a great equalizer in a sense. It's really going to be the main driver for the creator economy, which as crypto started as a big social movement, it actually wasn't based on banking or anything else. It was a social movement. I think you're going to see folks be able to make money and be able to track their creations. So I think that is one of the most exciting things that's going to come about in the next 5 to 10 years.
So does that mean that Quake will have some focus on crypto, blockchain, NFT kind of investment pieces in the next years?
Great question. Right now, we've closed Fund 3 to new capital. So more to come on Fund 4. Both Jason Fernandez, their managing partner at Quake, and I are thinking about what our thesis will be for Fund 4. So yeah, more to come on that.
Okay, great. So basically that crypto is now something serious and you can't completely ignore it. Blockchain is there to stay, is what I hear from you.
Yes.
Okay. All right. So guys, blockchain guys, you got hope. I'm going to ask you a very personal question. And so usually people are approachable, affable, they're easy to talk to, but suddenly the moment they start wearing an investor tag, they're very hard to get. At least this is something that would be top of their minds, of the founders' minds, people who are on the show. I can promise you that 90% of them would have this problem. Why is it so hard to get an investor?
Well, I think that's a very broad question. I think, especially, well, I guess in any time, it's probably hard to get an investor's attention. But I think especially today, there are so many startups. There's so much capital in market, so there are a lot of startups. But I think it's a function of really doing the right kind of outreach to investors and staying in front of them, but really sort of doing your homework in terms of not only looking at the website, knowing the stage, knowing who the partners are, but really following them on Twitter and LinkedIn and all the social media and Medium, and really following them and really understanding what content they're putting out there, how they're looking, how they're viewing deals, where they are in their fund. Are they just launching their fund? How big is the fund? Because if you have a startup and it's not a 10 to 20x type market or scale, and it's $100 million fund, the chances of you getting attention from any of the partners or any of the associates is probably not going to be as great as if you go after a fund that's a little bit smaller. So I think there's so many different variables that go into it, but it's really doing the research and really understanding what the thesis is, what kind of fund size is it, who the partners are, what their backgrounds are. You have, Quake Capital was started by Glenn Arganbright. He was a founder for 14 years. He's very founder first. Obviously, we are beholden to our LPs, who are also very founder friendly. They're all family offices. And so, I think those are the key things to look at. Who are the partners? What is their background? What is the overall culture and thesis for that firm? And also, who are their LPs? Because that has a lot to do with it too. That has a lot of influence over the investment decisions, how they manage their portfolio, and that kind of thing. So those are maybe some just a few tips, but I'm probably not saying anything that founders don't already know. It's just kind of reiterating it.
Got it.
Yeah.
So, I mean, I'm going to just take a couple of more questions from my side, and then I'm going to start picking up the audience questions. What kind of a rookie mistakes have you seen people approaching you as an investor?
Yeah, I mean, I think reaching out, not knowing, well, I get so many Series A deals, which is just that's not where our focus. So that goes into the abyss. And I would also say, yeah, just not knowing who we are, doing outreach that's just completely not targeted. I don't at all agree with this sort of spray and pray model, or doing outreach and just sending it a blast out to everyone. I really don't. I believe in building your investor list and giving updates to investors that you've spoken to and that you want to continue your dialogue with. And also really taking the time to put together what is the comp of your round.
Got
Who
it.
do you want to be speaking to? Who are your leads? Who are your syndicates? Who are the angels? Really building out that composition of your round, and then launching, your outreach. Because then you're just more strategic about it. Investors are not just about money. It's about how they can align, what networks can they open up for you, what doors can they open up for you, what strategy can they bring to the table. So that's how we look at deals too. We're not just looking at it like, okay, well, the first part is, okay, do we want to invest in this company? And then we put on the lens of, okay, how can my network, how can we help this company truly scale and accelerate their business? And you as a founder need to do the same. You need to look at, see how that investor can open up doors for you. It shouldn't just be a check. It's a very long-term relationship, longer than a lot of marriages. So
absolutely. And this I think what a lot of founders I see, they fail to build out relationships with people. I mean, it's not about a transaction. Transaction will happen only if the relationship is there, and that's something I see a lot. People approach us even as a family office. We still get some of the deals there, and people just don't invest in relationships. And I think that is where there's a course correction which needs to happen. Last question to you from my side, Amy. How should the founders reach you?
Well, my email address is amy@quake.vc. And everything we just talked about. If there are founders out there that have that are looking for capital and do their homework, yeah, reach out to me. I'm happy to help. Yeah.
And do you get the deal flows from DoDash platform, by the way?
Yes.
Oh, wonderful.
Yeah, we'll be looking at that as well.
Yeah, amazing. So great. I think what I'm going to do is I'm going to start taking questions from the audience. So there is any interesting questions coming here? Okay. What? We are an Indian government registered licensed micro lending institution. No, that's not a question. That's not a investor question. Sorry, I'm not picking that up.
Actually, before we jump into the next question, the best way to reach me is through DoDash. Yeah.
Thank you.
The question of what's your email? Can you type it out? The DoDash platform would be the best way to reach.
Right. That's where you come with the data.
Yes, exactly.
Yeah.
More targeted for sure.
That's more targeted and qualitative, evidence over opinion.
Exactly.
Yeah. So this, are there any questions? Okay. Do you invest in Africa? There's a founder from Namibia asking this question.
Yeah.
Venturing into animal feed. Is that?
We just don't have any expertise in Africa. And I think that's why we haven't. We've looked at deals, but we have no expertise in Africa. So that's why we haven't. Again, it comes back to how can we help? And that's really running a program like an accelerator program. That's what we need to do. So we need to scale and grow companies. And I have no expertise in Africa, and the other managing partners don't either. So that's why we haven't.
Great. There's this question from an audience who said, do you invest in solo founders?
Yeah, we definitely have. I mean, I think the one thing to think about with solo founders is, as you present yourself, are you able to, work sort of not well with others, but are you open to having a co-founder in the future? I know some VCs really kind of need that, and that's part of their thesis is having co-founders. And also, I mean, it can be a very lonely journey if you're just a solo founder. So it's, can you work well with, another individual really giving you feedback that you're going to listen to? Are you coachable? That's another thing that we look at, especially with single solo founders. So yeah, I think those are some of the key points to think about as you are a solo founder and how you present your team and yourself.
Mm-hmm. Would you be able to also help with the co-founders? Just as a continuation to the previous question. Do you have?
Yeah. You mean in terms of finding talent or?
Yeah, finding talent.
Yeah, absolutely. That's something that we help a lot with, is building out teams and, putting together the right strategy to bring them on board, the interview process, all of that. Yeah.
There's a very interesting question, and this is especially for you. What kind of craziness do you like to see in the founders?
Very interesting. I mean, I think just working hard. I think there is a fine line between working too hard and which I've definitely seen with founders, and they burn out. But I think working hard is, and being really passionate about what you do and sort of like thinking about nothing else. I think that as an investor, that can be a really good thing if you're moving in the right direction and you're goal setting and you're moving the ball forward. I think that's a really good quality. I think also emotional intelligence, and I know that doesn't go to the crazy, but that's super important. How you react to things, how you handle conflict resolution, those are all things that we look at. When interviewing.
We talked about this emotional quotient in the founders. I have, what takes you off when talking to founders?
I don't know what ticks me off, but what I guess maybe turns me off. There's also having too much bravado and having too much arrogance. That can come off not so great. I think just over the interview process, and that's why we do multiple interviews with founders before we make an investment decision, because we want to see how they, each day could be a little bit different, and how they're going to interact and how they're going to answer questions if you push them on certain questions. There are VC firms that literally reschedule and reschedule and reschedule interviews with founders just to see how they're going to react to the changes. So yeah, I mean, I think being patient and understanding the question and answering it correctly. If I ask you a question again and you answer in the same way, that doesn't necessarily show that you're, that you're explaining it to the audience the correct way. So those kind of things, like just picking up on those kind of cues and having patience and really being a good, good educator. Not every investor is going to, especially we're generalists. So if not every investor is going to know your market. So not using too many acronyms and sort of explaining things on a fundamental level, I think, and educating an investor is something that's important from an education standpoint, and also important of how are you going to tell your story to folks that maybe don't understand it. So we look at all those things. I learn a lot about a founder through the interview process.
There's a very interesting problem somebody's thrown up here. He says, I am assuming what he says is they've got the Android app, they have a lending license from the government, but they are unable to raise any kind of a seed funding. Please suggest what should they be doing?
Do they have traction? So their traction is that they have the license. I have more questions to answer properly.
Yeah, absolutely. We need a lot more information to be able to answer this completely. And there's a very interesting question which comes from a founder. In fact, we are using one of the tools from them. It's called Rake. It looks like you work with Foundational. Any advice in working with them? I'm not sure if the question is clear enough, but would you like to hazard a guess here?
I don't know what Rake is. So yeah.
But the question is the founder of Rake. So the Rake is, what would be the best way to describe Rake? Probably
maybe all-in-one messaging platform, I think.
Yeah, something like that. Okay.
All-in-one messaging platform. And the question is, would I want to invest or?
So it looks like you work with Foundational. Any advice in working with them? I don't know what exactly this question means. That's why I thought maybe you'd like to hazard a guess here.
Yeah,
but maybe
I don't know what Foundational is. Yeah.
Maybe you can elaborate, Mike. Okay, there's a question which is coming. If a business has no traction or negative traction, but it is a product that actually solves a real problem and has no direct competition plus a huge market, what are the red flags you would want to see? Or what are the red flags that you would see?
Yeah, I guess, why doesn't it have traction? What's the feedback from the market as to why customers aren't signing on? That would be my main question.
So how potentially could this solve this problem? Let's get into a bit more. This could be of huge value to a lot of founders on the platform right now. So how could potentially they solve this problem?
Yeah, I mean, I would look at who their customers are and look at who they have talked to, who they want to talk to, and how are they outlining the value proposition. I think it's more of a sales and business development question than anything. So really truly understanding who their customer is, what the feedback to date has been, how to iterate on the messaging, and how can they approach different partnerships? Maybe it's, what I referred to earlier, maybe it's a channel partnership that can help them get to market faster. Looking at all different opportunities with customers as well as potential strategic partnerships. But yeah, I would look at the messaging and I would look at the feedback to date.
Got it. So, okay, somebody says that I would like to share my story. Okay, they can share the story on the chat, please. There's a question. Sorry?
I said, or in DoDash.
Or in DoDash. I think that's the right place to do that, because not only that you share story, you also share data which backs up the story.
Exactly.
Yeah. So there's an interesting question is coming up. We are a startup and we want to know which is the best way to get in touch with investors in seed stage. For example, after mails and LinkedIn, we need to call, ring the bell, because the biggest barrier is to get in touch in a short few months. Yeah, I think this is again an approach question. What do you think about it, Amy?
Yeah, I mean, again, I think it comes down to doing the research on which seed funds. There's Crunchbase, there's LinkedIn actually has a good way of researching that information, but I would say Crunchbase would be my go-to if I was a founder. It has the ability to sort of search by stage. And then truly understanding who that investor is, making sure the industry is in line, making sure the overall thesis aligns with, what the startup is, and starting to follow the folks. I know you mentioned a tight time frame, but taking the time to follow them, see what their messaging is, see what the content they're putting out there is, just to get a clearer understanding of exactly, how they look at deals, how they look at your industry. Following them on Twitter, maybe interacting with them. I think it's more than just doing an email outreach. It's really truly understanding how you should position the business to them and what their key points are. But yeah, I think that and then having very not too long emails, but very strategic outreach, maybe even just bulleting out the key points of, traction, market size, go-to-market strategy, and then maybe a bit of what your ask is. Yeah.
Got it. So it's basically concising that information in a very compelling way so that, it gets your attention, right? That's pretty much what you're saying.
I mean,
unfortunately.
Yeah, sorry to interrupt you. I would say that DoDash is the way to go, because it really honestly leads you through all of the key questions that investor is looking for, and then curating that information for the investors. So if I was to go into DoDash and I want to look at seed deals in and around Web3 or seed deals in and around a specific industry, I will be able to get that in the DoDash platform. So I think really going in and being prompted, you'll have a clear understanding of what investors are looking for just by going through the process of logging into DoDash and going through the prompts and putting in your information. I think that's a really beneficial way to understand what an investor is looking for.
Got it. Thank you so much. There's a question from an entrepreneur. He says that as an entrepreneur, everyone thinks that traction is great, but how can a founder measure the traction without subjective impressions? KPIs are not subjective, but what's your take on this question?
The KPIs that we outline, I'll answer the last part first. The KPIs that we outline with founders are benchmarks in the industry. So we really look at, okay, what are the metrics that you're tracking in your business? And then from a business model perspective, what are the benchmarks as you lead up to your late seed and Series A? What are the benchmarks in the industry that you need to be hitting in order to get funding? So those are the key data points. They're not subjective. They're based on the metrics of your business. So I'm not sure if I understand the subjective part of the question, but that's what we look at. We look at those data points. And I think, because we're seed stage and because we look at traction, we plug into those data points. But if you're much, much earlier, those are going to be different things that an investor looks at. So, if you're at idea stage, that's a totally different investor than Quake and what I've been referencing. But I think it's really important that you align with the right type of investor for the stage that your company's at, because then you're not going to be held to these data points, and it'll just be a better match overall.
Got it. Okay. How long should an entrepreneurs keep their business ideas if there's been no funds to run business for some years? I don't think if you got no funds, no business, got to look into your own bank account to fund that business. At least make sure that it's delivering the signals which are essential for investors to take at least start looking at it. What do you think about it? I mean, how long should an entrepreneur stay with the idea at an idea stage?
Honestly, I feel like that's a personal question in terms of what are your finances? How long can you sort of go on with your idea before you get traction? A lot of founders work until they are able to get traction. They're bootstrapped. So there's so many variables that go into that. I can't say hard and fast, like 2 years or 5 years. It's just, it has to do with market timing too. I think that, taking a hard look at your idea, and if it's not being received in market, maybe it's market timing, but there's so many different variables that go into that decision making process that I don't have a hard and fast rule on it. I mean, I feel like you might even have a better answer than I do.
But this is your show. I'm not going to bore people with my answers.
Okay. Yeah, I don't have a set time. I think there's just a lot of things that you need to think about, and I mean, you need to live, and it depends on where you are in life. I mean, so there's just so many different variables that go into that, answering that question. But yeah, that's how I would answer it.
This is a very interesting question, and I think it's a fantastic point of view. There's somebody suggesting that there's a research which suggests VCs get their best deals, which they are able to proactively find, as opposed to an inbound inquiry. I think that she's referring to cold inbound rather than. So in order to raise capital and get found by a VC, what should founders be doing? I mean, I think this is a question which is where to look, how to look, and how do you find potential unicorns of the future?
Yeah, I mean, I think there's so many great resources. I think knowing the different angles to sort of play, if you're a female founder, there's so many different female founded organizations, all raised. There's just a number of different avenues that you can explore depending on what stage you're at. There's incubators, there's corporate, there's corporate accelerator programs. There's so many different things to explore. I think it's about really understanding what you have access to and what sort of angles you can play or tap into. So again, if you're female founded, minority led, there's so many different things that you can reach out to and become a part of, and so many different groups that you can become a part of to get support system. I think university programs, they also have a lot of great sort of accelerator and incubator programs. So depending on the university that you attended. So I think that there are a lot of different ways to tap into support resources. And, there's also grants. So depending on, your business, tapping in and making sure that you're tapping into non-dilutive capital. There's so many different resources. It's really a matter of doing the outreach and putting yourself out there to get the kind of support that you need. So yeah, I would say, hopefully that answers the question.
One question which bothers me as well says that are investors skeptical to invest in hardcore technological inventions irrespective of global market potential? I mean, my personal take is no. I mean, but what do you think? Are investors wary of investing in hardcore tech solutions? What do you say? What do you think?
If they're referring to hardware, if that's there are investors that love hardware,
that specialize in hardware. That's right.
But it is, especially at the stage that we invest in, it's very hard. But we've done hardware deals. And we actually just invested in a company that actually finances and finds lenders for hardware deals. So again, to the resources thing, but no, I would not necessarily agree with the fact that no investor wants to do that. I think it again, all the variables that we talked about, there has to be, the right kind of market opportunity for it. There has to be, the right kind of manufacturing. Your COGS need to be at a certain, a certain level to the potential revenue. I mean, there are a lot of different variables that go into the, launching a hardware startup. But absolutely, if you're solving a real need and a problem and the market size and market opportunity is big, I think it's just aligning with the type of investors that invest in hardware.
Got it. Absolutely. I think that's a specialized field, and that's where they should be. Those are the doors these founders should be knocking. Very interesting question, and I'm pretty sure it's going to cheese you off. Have you funded outside of the US, companies outside of the US, or the companies who want to start in US? And if so, do you help them settling in US with immigration and visas and all those sort of things?
We have actually. So
really?
Yeah. So we're global. We have invested in startups that are looking to come to the US. There obviously has to have a market opportunity and potential in the US. But yeah, we have, and we've helped with, I don't know about immigration, but we've helped with, visas and that kind of thing. I think being a part of our program in the US enables a certain type of visa that we've helped with. So yes, we have.
Oh, amazing. Now, there's an interesting question coming. If a startup is built in India and the market is in Europe, would you invest in that startup? And if you won't, what is the reason? Well,
we have some expertise in Europe, but it would have to, I mean, I don't know. That would be a question mark for me. Just because if their go-to-market is in Europe, that's not necessarily an area of the world that I have a lot of connections in. It would have to be a partner decision. And obviously it would have to be good market opportunity, traction, all the other variables that we've talked about. But I don't necessarily have the expertise in launching and doing go-to-market in Europe. So yeah, I would have to confer with the other partners at Quake.
Got it. What are the skills and experiences do you expect from a founder or co-founders? Does Quake invest in circular economy businesses?
So what kind of experience I'm not sure if I understood the question.
I think He's kind of referring to the skills. I think the skill dynamic and the experiences. I think of the founders, the founding team, and then the follow on to that question was, do you invest in? Let's reverse the order. Do you invest in circular economy business?
In circular economy businesses?
Yeah. I think there's more referring to sustainability quotient of those the businesses. Again, that's very broad, but I think circular economy is a new buzzword.
Got it.
Yeah.
If it's a profit focused business, yes. And again, all the other variables, but yes, we have invested in companies that are sustainability. Actually, we did an analysis of our portfolio about a year ago, and about 35 to 40% of our portfolio aligned with one or more of the of the ESG focused areas. So we have invested a lot in sustainability and sort of the UN initiatives.
Got it. And then in that case, what kind of an experience and expertise you would expect from the founding team?
I think the expertise of the founding team should be complementary. I think, founders should have different areas of focus, especially since, a founding team and you're going to be wearing a lot of hats in the beginning. I think it's important that the team have just complementary skill sets and focus for the business. So there's not, they're just focused on different things, but there has to be, I always like to hear the team story. So how long have you known each other for? Have you worked at previous roles together? That's an important part of it, because I think, working with brand new people, there are a lot of kinks in a relationship, and
Right.
as intense as it is, you really have to have some history together. That's the best case scenario. Yeah.
Right. So how should founder assess the background and experience of the VC partners?
Well, I think LinkedIn is a great way to do that, just to see, what the background is. Yeah, I mean, I would say LinkedIn is a great way to do that. What content have they put out? That's another way, another lens to look at the VC partner. Yeah, I mean, and as you get further along in your due diligence, I absolutely would ask of, different portfolio companies that they work with and introductions that, you can make. But if you're really serious about working with a VC, I would, do some outreach to founders that are in their portfolio.
Got it. And do you invest in the area of service robots? So basically, there's an interesting startup which says that we are building service robots that will change the economics of the industry. They build a robot based without needing to build the hardware, a model similar to Google's Android for smartphones. Would you like to have a look at?
Yeah, absolutely. I would say put it in DoDash and we'll take a look. But yes, that is definitely of interest. We haven't to date, but that is definitely an area of interest, especially with all the pain points that have been illuminated with the global supply chain and the pandemic. So yeah, that's very interesting.
There's a question which is kind of pretty interesting, and I think I know the answer because, but for the sake of brevity, I'm going to just put it up here. The gentleman says that most VCs are looking for single revenue stream businesses with standard organizational structures. What is the best way to present companies with multiple revenue streams and a new governance model?
I don't know that I necessarily agree that we only invest in single revenue stream. I think maybe what they're alluding to is not having too much of a fractured focus in the very beginning, just because it's too, you need to understand, your go-to-market and your beachhead, and really kind of nail that before you diversify too quickly. Yeah, so I would say that it's not that we don't, it's just proving out one area is important before diversifying too quickly. And then the second part of that question, what was the second part?
What is the best way to present companies with multiple revenue streams and a new governance model?
I don't know if I necessarily understand the new governance model.
Absolutely. Even I don't.
But I think the multiple revenue streams, I think it would just be important to understand, are they already all aligned? Or are they rolling out in phases? What is the approach? What's the strategy? What's the go-to-market? I think would be my main question. And yeah, I mean, and also just if it's at a later stage, then yeah, that's great. But at that seed stage, it's hard to do multiple if you're not, yeah, it's just too, my question to them would be, how are you able to focus on all the different revenue streams, and really make sure that you have product market fit with, a single one.
Yeah, lifting up one revenue stream is a huge challenge. Multiple at an early stage, ouch, it hurts.
It's too fractured. It's
too fractured. Yeah, absolutely. I think the next question: do you invest outside of US? I think you already answered to that question. I mean, DoDash is not it's a non-US company, and you've invested, so we are a good example here. You do invest outside of US. There's an interesting question which says, let's say you lose all your money today. Tomorrow you get an idea related to making a software, but you don't know how to make it and how you'll turn that idea into a successful business. Would you invest in anything like that? But I don't think at an idea, so you're not an idea stage investor, so I don't think this question is even relevant. What do you think?
No, but my question to them would be, how did you lose all the money the first time? And what are the key lessons that you can take out of that? Because I think that needs to be part of your story to your early stage investor. Because, mistakes are going to happen. And, but I think what the key learnings are is that's the sort of the gold that can come out of that. And yeah. That's how I would sort of approach that.
So again, there's a question regarding electric vehicle. Would you invest in an electric vehicle startup with automotive bodybuilding, commercial fabrication? I think that's a very specialized field. BIW is a very specialized field. We've been in that market for a very long time. What's your take on that? I mean, BIW and electric vehicles, that bodybuild is a different story altogether.
It's not, it's not something that we've invested in to date. It's very capital intensive. It's a much longer term play and very capital intensive than fits into our thesis. Yeah, so while I think it's definitely a lot of validity to the space, of course, it's just not something that Quake would necessarily invest in.
Got it. So the next question is, in seed stage, we need to have a clear idea of exit strategy. Do we need to have a clear idea of exit strategies and have a deep knowledge of financial, at least have financial information laid out for the next 5 years, or it is not important to you at this stage?
No, it is. It is important. I think I think it's also important to outline what the exit strategy is in the deck. It doesn't have to be necessarily in the initial pitch, but as you talked with investors and you go through the process, it's important to outline that you've thought about it, that there, what are the multiples of recent exits in the space, that you have a very clear understanding of, what the M&A in the space looks like. If IPO is your route, which is very bold at the seed stage to even say, but if IPO is your route, and definitely outline and have a clear understanding of what other companies in the space or, tangential spaces, what those look like. Investors absolutely think of that. As I mentioned earlier on, if you're talking to a huge fund, they need to understand the multiples for that industry or for what market you're going after are going to be big. So having a very clear understanding of that at seed stage, I think, is very important.
Right. So we're just about running out of time. I'll just take a couple of more questions. And do you have the time? Let me first ask you another couple of minutes.
I do. I've got about 8 minutes.
Okay, perfect. So then we're going to make use of this 8 minutes, at least 7 of this 8 minutes. Question is that we have a strong traction here in Europe and we are doing our first steps towards North America. What would be the right time to look for UVCs in the US?
So you have a lot of traction in Europe and you're outlining your go-to-market strategy in the US.
Yes, that's correct.
Yeah, I mean, I would start talking to investors in the US. I would start talking to investors, but keep in mind that a lot of investors in the US really look for companies that are looking to come to the US that have plans to have a headquarter in the US. So I would just keep that in mind, unless they're a VC that invests in international companies as well. So just keep that in mind as you're talking to US investors. They might want to have a laid out plan for a headquarters in the United States.
All right. So this is another interesting question. Amy, would you be able to say how you would go about assessing a founder or market fit in a very early stage startup, in an early stage startup?
Yeah, I mean, I think if that founder has launched other startups, that would be a clear indicator in a similar market and industry. That's a very clear indicator. We have invested in companies that were very early. DoDash wasn't necessarily in market. They were in market, but didn't have as much traction as we normally look at. But because the founding team had such a strong background, that's why we invested. I think same can be said for super early stage. I mean, if you're talking idea, that's never something that we at least need an MVP, most viable product. But we have made investments in companies that had most viable product and super early stage. And a lot of that came down to the domain expertise and the expertise of the founder in launching previous startups, as well as, the market opportunity. The market opportunity needs to be significant.
All right. The next question coming up is, do you invest in hydrogen technology like fuel cells and electrolysis? Is that a thesis? Is that a focus area for Quake Capital?
We haven't to date. And it's not, I mean, and since we're closing out I don't necessarily, it's not my area of expertise. So, as we launch, as we're potentially launching Fund 4 in 2022, it won't be necessarily my thesis, just because I don't have expertise in that area. And it's very, I think with any kind of technology that's super scientific, you really need to have that kind of expertise on the team. So I think as you're looking at investors, I would definitely look at investors that really clearly understand that space, or can open up doors for potential partners.
Got it. Do you invest in agri-tech startups which provide technological innovations for farmers for day-to-day activities?
Yes. One of our, out of Fund One, one of our companies called Swine Tech, and we invested in them, and they have basically developed a way for sows to not roll over on their piglets. So
Okay, that's pretty
doing
neat.
phenomenally well. Yep. It was a pig farmer out of Iowa. So he's, yeah, great founder, product market fit, or founder market fit, and they're on their way to product market fit. They're working with some of the largest swine producers in the US. So yes, absolutely we do.
And Amy, the last question coming up to you. I have two ready to go market products in the chemical industry. One of them is for special kind of road markings, and the other one is for disinfection systems to remove all kind of biofilms, even in atomic power plants and a lot of other applications. Are these kind of deals interesting to Quake Capital?
Yeah, it would be interesting to Quake. Again, I like the scientific expertise. We don't necessarily have that level of chemical expertise, but depending on what the founder is looking for from an investor, you know, it may not be that you need that scientific expertise. It might just be that you need introductions to strategic partners, or, you know, closing out rounds and introductions to investors. So it would just be a matter of understanding what the needs are of the founder, and also what different metrics and proof points and traction that they have in market.
Amazing. Awesome. So this has been a very, very insightful session. I was coming to a close, and I just wanted to, I can't thank you enough. You know, I mean, I've had an opportunity to talk to you about, we've had weekly calls, and I've always taken back some amazing insights and something to work upon. It's been an amazing experience to work with Quake Capital. You've been very, very supportive. I think it's very hard to find investors like Quake who are so founder friendly. So thank you so much for making this time. Amy, a last couple of words which you would like to say before we sign off for today?
Yeah, no, I think using the DoDash platform, I think is going to be a really great way to understand, again, all the different variables and data points that are important to investors. It'll also help you guys align very closely with investors. So I highly recommend getting on the DoDash platform, and yeah, just keep the faith, keep working at it, and yeah, it's been such a pleasure to talk to you, and I really appreciate it.
Thank you. Thank you, Amy. And I wish you a wonderful day ahead. Thank you, audience, for joining in, and go ahead, sign up on DoDash if you haven't already done so. Bye-bye. Thanks once again.
Bye, everyone.